Good morning, traders, and welcome to today's market update. Let's take a look at the key moves shaping the markets this morning. So, starting with the US dollar index, the index held above 100 on Monday, staying near a 6 month high as investors evaluate the Fed's policy outlook. The dollar continues to move between risk aversion demand and expectations of potential rate cuts. Recent corrections in risk assets have supported the currency, while concerns about labor market softness keep near term easing on the table. Policymakers remain divided, with Boston Fed President Collins saying she has not yet confirmed a view on the next step. The dollar strengthened against the euro and pound amid the European fiscal worries, while the Japanese yen softened after Japanese officials delivered a fresh verbal intervention warnings. And technically, the index remains supported above the 20-day moving average, with RSI near 64 and MACD showing improving momentum. A breakout requires a clearing a resistance at 100.4 and 100.67, and downside risks emerge only if the index falls below 99.85 and 99.6. Next, WTI crude oil. The oil traded near $58.9 on Monday after a 3% drop last week. Markets are digesting signs of limited progress in US brokered peace talks between Russia and Ukraine, though major obstacles remain. Any agreement could ease sanctions on Russian oil, adding supply to an already oversupplied outlook. And expectations for a possible US rate cut next month have also influenced sentiment. WTI has declined more than 4% this month and is heading for its fourth straight monthly loss. And technically, WTI hit a 1 month low at 57.33 last week, marking a fourth consecutive weekly decline. Bears remain in control, especially after prices broke long held support near $58. The next downside levels are $56 and October low at 55.97. Initial resistance sits at 59 and followed by 59.8 and $60 psychological level. And moving to gold, gold traded around $41.20 per ounce in early European trading. Prices stabilized after Friday's decline, supported by Fed President John Williams' comments that cuts are possible in the near term. However, the Fed remains divided, with Dallas Fed President Logan calling for rates to remain unchanged for some time. A stronger equity market could also divert flows away from gold, while physical demand remained weak last week. Technically, gold still faces some short-term pressure, but multiple moving average offers strong support. The key levels remain last week low at 39.98 and the 4,000 psychological mark. Below that, support sits at 39.58 and 39.30. And on the upside, watch 41.32 with 4,200 as the next major barrier. And last but not least, the Australian dollar. The Aussie dollar held firm on Monday as traders looked ahead to Wednesday full monthly CPI report for October, which is expected to provide a clear guidance on the RBA policy. The RBA remains cautious, with recent meeting minutes suggesting rates may stay unchanged for an extended period. Market pricing reflects only a low probability of near-term easing, and Assistant Governor Sarah Hunt reiterated that monthly inflation data could be volatile and shouldn't drive immediate policy shift. And technically, Australian dollar traded near 64.60, staying below the 65 psychological mark, and the pair continues consolidating between 64.20 and 65.45, indicating a short-term sideways trend. Momentum remains weak with RSI near 40. Support lies at 64.20 and 64, while resistance stands at 65 cents and then 65.41. So that concludes today's morning review. We'll continue monitoring Fed expectations, geopolitical developments, and also key data releases throughout the week. So trade safe, and I will see you soon.